Good evening. Good evening, all. So today in our lecture, we are going to start the foreign company, the topic called foreign company, that is companies incorporated outside India. Now, the concept of companies incorporated outside India, this is the smallest topic of the Companies Act that covers all the provisions which are applicable over the companies that are incorporated outside India, but doing business in India, then only we are going to read as per the Companies Act 2013. It means those companies which are incorporated outside India, they are doing businesses outside India also, but again, they are doing business in India also. They have a branch or they have some companies, a private company. So they are called as a foreign company, right? So for them, this is the concept of companies incorporated outside India. So before moving towards the concept of companies incorporated outside India or these further sections which are applicable for this type of companies, that is from section 379 to section 392, right? So these are the sections which are applicable to the foreign company part. But before going towards the Companies Act provisions with respect to companies outside India, first we will discuss what exactly is the foreign company. So, foreign company as defined under section 2, section 2, clause 42, that deals with the definition of foreign company. Now, that definition of foreign company is divided into two parts and both conditions are in addition to one another, right? First concept deals with the foreign company, and this concept starts with first, as a place of business in India means any company which is incorporated outside India. Say for example Pepsi, say for example Google, say for example Microsoft, IBM, right? These are the companies. Say for example Dell, Lenovo, HP, right? Samsung. These all are companies which are incorporated outside India. Which first condition has a place of business in India. Flipkart. Flipkart is a foreign company, right? Don't get confused with Amazon is obviously by default is foreign company, but Flipkart is also a Singapore incorporated company and Flipkart is a foreign company. Now, so Flipkart is incorporated outside India, means Singapore, which has a place of business in India, Flipkart having headquarter office at Bangalore, which by whether by itself or through any agent physically or through any electronic mode, right? Through any electronic mode means website, Flipkart ki website, right? So that is also foreign company and conduct any business activity in India in any other manner means if any company incorporated outside India, but they are not doing business in India, then this concept of foreign company or this definition of foreign company, section 2, clause 42 will not apply over such companies. So what is foreign company? Foreign company means section 2, clause 42 deals with the definition of foreign company. And for the purpose of foreign company means any company that is incorporated outside India, which has a place of business in India, either in physical mode or electronic mode. For example, a company is providing cloud software, cloud database kind of thing, right, in India, and that is incorporated outside India, but that is providing whole mechanism through electronic mode only. So that electronic mode will be covered in place of business in India, and that company is doing a business activity in India, so that will be covered under the definition of section 2, clause 42, that is foreign company, right? This is the first point. Now let's analysis that kind of definition. What do you mean by the concept of electronic mode? Now, what exactly is electronic mode? So law has clearly specified in the rules part. Electronic mode means carrying out electronically based whether or not the main server is installed in India, right? Means you are doing your business electronically it is not at all important that your server is located in India. So whether it is located outside India, then too you cannot claim any exemption from the definition of foreign company doing business electronically, right? Again, also includes what it includes. It includes all the B2B transactions. Means if you are providing your services to the businesses in India, means business to business transactions, or B2C transactions, business to consumer transaction, customer transaction, accepting deposits or subscription in securities in India, any kind of financial settlement you are doing via electronic mode, right? China-based companies providing loans to the Indian residents, right? And they are doing fraud activity, web-based marketing, supply chain management, online services such as telemarketing, education part, information research, telecommunicating, all related data communication services, etc., whether conducted by email or you are doing some concept via mobile or social media or cloud computing, that all are covered in electronic mode only. For example, let's take an example. For example, there is a company incorporated outside India. Say, for example, let's take the example of Singapore, right? Few person incorporate a company incorporate outside India, and they are providing research, stock market research reports to the person in India. So that is covered in this concept of electronic mode. Whether they are providing via email, mobile, social media, or cloud computing kind of thing, then too they are covered with the definition of foreign company. So they have elaborated this definition in a vast manner like electronic mode. Next. As per section 386, place of business, it includes share transfer office or share registration office also. It means what? Suppose a company, foreign company is incorporated outside India, and that company established a share transfer office in Mumbai or share registration office in Bangalore, then too that will be considered as a place of business. Next, incorporation of company outside India by Indian citizens will not fall under the definition of foreign company unless it fulfills the condition of section 2 clause 42. Means, say for example, like Mr. Sharmaji and Vermaji incorporated company outside India and both are citizens of India, resident of India, then that will not considered as a foreign company unless they are fall under the section 2 clause 42 definition part. So this is the first definition, important definition from the concept of companies incorporated outside India. What is the section number? So section number is 2 clause 42 is the section number of this definition, that is companies incorporated outside India, right? This is the first definition part. Now, before moving towards the concept of this section 379, means first section of this concept, let's take the definition of foreign company from our study material also. So foreign company is section 2 clause 42 that prescribes the concept of foreign company. Foreign company, section 2 clause 42. Foreign company means any company or body corporate incorporated outside India which has a place of business in India, right? Place of business in India, whether in a physical mode or electronic mode, that is not at all relevant. Means you are doing business in India by whatever mode of business, that is not relevant. And both are end condition, not or conditions, right? Conduct any business activity in India in any other manner, that will be considered as a foreign company. Now, so what is the concept of electronic mode as prescribed in 2014 rules? Means carrying out electronically based business whether main server is installed or not. Yeah, remember one thing, examiner will ask a simple question of foreign company and it will emphasize this line that main server of this company of this cloud computing company is located in London. So whether decide on the basis of this provision, main server, that whether the company is a foreign company or not a foreign company. So you need to remember whether the main server is located in India, outside India, that will not affect the existence of this company as a foreign company. But not limited to, means these all are combined concept. First is you are doing B2B transactions, you are doing B2C transactions, data interchange or other digital supply transactions that will be taken as a B2C transaction. B2B transaction happened in electronic mode only. First point. Second, you are offering to accept deposits or inviting deposits, accepting deposits, subscription in securities in India from citizen of India. So that will fall under this concept. Financial settlement, web-based marketing, advisory, transactional services, database services, product supply chain management, that will cover. Online services such as telemarketing, telecommuting, telemedicine, education, information research, and all related data communication services that will fall under the concept of electronic mode as prescribed under rules. Whether conducted, you are doing these type of activity, and this is not exhaustive list, right? These are the some hints provide. You are doing other business in electronic mode that will cover under this concept of electronic mode, and you are doing your businesses via email, via mobile devices, social media. You are doing your business via Telegram. You are providing the services of calls of stock market via Telegram channel, right? That will also cover. Cloud computing, document management, voice and data transmission, or otherwise. That otherwise will cover each and everything. Example. Zecpac Limited is a shipping company incorporated in Japan. Fantastic company incorporated in Japan. Japan is outside India, so this is the foreign company. Next, the company has set up a branch office in India after obtaining necessary approvals from the Reserve Bank of India. Branch offices are generally considered as a reflection of the parent company office. Thus, branch offices of a company incorporated outside India are considered as a place of business for conducting business activity in India and will be required to follow the provision of this chapter and such other provision as are specified elsewhere under the Companies Act 2013. So you need to comply each and every provision of Companies Act 2013. Now we are moving towards this concept that is called foreign companies. This is the first section from this group of foreign company section, section 379, and this is the most important section. Okay, so application of this act applies to foreign company section, which is section number section 379. So section 380 to section 386 and section 390 to 393 shall apply to all foreign company. Means these are the group of sections which are applicable to the foreign company as prescribed in this section 370 and 9. Second point. However, central government may by order in the official gazette, government love letter, exempt any class of foreign companies from any provision of the above sections. Above section means this section, and that exemption copy need to be laid down before both the houses of parliament. This is the second part, right? Now, this is the most important concept with respect to foreign company, and by introducing that provision, government cover many companies as a foreign company. Remember one thing, right? When 50 or more of the paid up share capital, equity or preference or both is held together by one citizen of India or one company incorporated in India or one citizen of India, one company incorporated in India, such company shall comply with the provision of this chapter and such other provision of this chapter with respect to business carried on by in as it were a company incorporated outside India. It means what? It means if you and me both incorporated company in Singapore, and by default we both are holding 80% of the capital of the company, means we are the owner of the company, 20% is holding by some foreign persons. Now, so this section 379, this points is talking about like your company is a foreign company. Why your company is a foreign company? Because your company incorporated outside India and you are doing business in India. We are doing some, say for example, import export of leather equipments. Now, so law has prescribed that if a person is citizen of India or a company incorporated in India holding more than 50% of the capital of that foreign company, so logical, you on your company from section 379 to section 392 will apply as of the Companies Act 2013. But this provision talks about like we will assume your company is incorporated outside India by ignoring the fact that your company was incorporated outside India. We will consider your company is incorporated in India. It means all the provision of Companies Act first, plus all the provision of foreign company, all the means from section 1 to 470, whatever is the section that will apply over to your company also. I think this point is clear. This point is very well clear, like how the provision will apply on the foreign company also, means whole Companies Act will apply on your company, right? So this is the concept, and this examiner will ask a simple 5 marks question from this point only, right? You need to remember, like if a person is incorporated foreign company outside India, but he is holding the majority part of the company, then that company will be treated as an Indian company, and accordingly, you are not exempted from the foreign company provision or the other provision of the Companies Act. So you need to comply from section 1 to section 470 of the Companies Act 2013, and this is the dangerous provision. Next, section 379 from theory part. Application of Act to foreign company, section 379. Application of Act to both to foreign company, section 380 to section 386. Both sections are inclusive, means section 380 also apply, section 386 also apply, and section 390 to 393 shall apply to all the foreign companies. It applies to all companies which falls within the definition of foreign company as per section 2 clause 42 shall comply with the provision of this chapter. Requirement of holding of paid up share capital, where not less than 50% of the paid up share capital, whether you are holding equity or preference or partly equity, partly preference of a foreign company incorporated outside India, is held by one or more citizen of India or by one or more foreign companies or body incorporated outside India, or by one or more citizen of India or one or more foreign companies or body incorporated outside India. So this is the definition of foreign company, means you are holding that part, whether singly or in aggregate. Such foreign company shall also comply with the provision of chapter 12. And these charts already uploaded on the student portal also, right? So you can download the charts from there. And such other provision of this act as may be prescribed with regard to the business carried on by it in India, as if it were a company incorporated in India, right? Means the majority part, minimum 50% is holding by one or more citizen of India, or by one or more companies or body corporate incorporated in India, or either of those, or in combination. So that will be treated as a foreign company. That will be treated as an Indian incorporated company, irrespective of the fact that your company was actually incorporated outside India. Means you need to comply the section part with respect to your company incorporated in India. Note, Chapter 12 referred to the above deals with the legal provision for companies incorporated outside India. Now, example second. The shareholder of Imar Company LLC, incorporated in Dubai. Your company is incorporated in Dubai. Having a place of business in India is as follows. First, Hinduja Company Limited, Indian owned 26%. Vaishali Company Limited, Indian company holding 25%. Remaining citizens of Dubai, means your company is incorporated outside India, that is Dubai, and you are holding shareholding of, means your company shareholding is holding by Hinduja Company Limited 26%, 26%, Vaishali Company Limited, Indian company 25%, remaining is holding by citizen of India. So you need to calculate whether your company is a foreign company or it is an Indian company. Means if you need to sum up both, so that is 51%. Means your company out of 100%, 51% is holding by company incorporated in India, that is Hinduja Company Limited, Vaishali Company Limited. So this is your Indian company. So that will be treated as an Indian company rather than as a foreign company, right? So this is the provision part. Now, and rest is holding by the citizen of Dubai. So the provision apply as per section 379 subsection 2. So if the examiner asks same kind of question in your examination, so you need to answer this provision in three parts. That is, first is provision, second is facts of the case, and third is conclusion part. In the provision part, you will explain the definition of foreign company along with this exempted criteria also, or the applicability of Companies Act 2013. Fact of the case, this is the fact of the case, and third is conclusion. The Imar Company LLC that is incorporated in Dubai, but all the provision of Companies Act 2013 will apply over such company. So section 379 subsection 2, Imar Company LLC will also be required to comply with the provision of 12 or 22 as not less than 50% of the shareholder of Imar Company LLC of both incorporated in India. Imar Company LLC will also require, what is required? Imar Company LLC will also required consist of body corporate in India. Imar Company will also required to comply with the other provision of the Companies Act, right? You need to provide the provision of Companies Act as may be prescribed with regard to the business carried on by its business place of business India as it were a company incorporated outside India. Karthik, there is a question. Suppose Indian individuals or partnership firm hold a share capital more than 50%, then it is an Indian company. Okay, so provision is saying that it is incorporated. 50% is holding by citizen of India, one or more citizen, and citizen stands for individuals only. This is the first thing. As per Indian Citizenship Act 1955, only an individual can be treated as a citizen of India. This is the first point. By one or more companies or body corporate incorporated in India, or by one or more citizens of India, or one or more companies or body corporate incorporated in India. Now, you can talk about like partnership firm can be treated as a body corporate, but partnership firm cannot be appointed as a member of the company, right? So partnership firm cannot hold any shares in the company in the capacity of a member of the company. So basically, an individual or a company incorporated in India that needs to hold 50%. Right? I think Karthik, your doubt is clear. So partnership will not be hold any shares in the company as per the Companies Act. So that was section 379. Now move towards the section 380. Karthik, your doubt is still clear. Section 380 talks about certain documents need to be delivered to ROC by whom? By foreign company only. List of documents to be delivered by every foreign company to the registrar of companies for registration part. Certified copy of charter or statutes or memorandum association in English, and if these documents are not in the English language, so in that case you need to provide the certified translation list also, right? This is the concept which you need to remember. Okay, so this is the provision part you need to remember. First thing is you need to provide your memorandum and article of association copy in English language. Suppose your company was incorporated in Germany. In Germany, in that case, your company is having memorandum and article in German language. So in that case, you need to provide the translation copy in English. Needs to be submitted, because in our country, ROC don't know even English, and what you are submitting is in German language. That will be problematic. Full address of the principal or registered office you need to provide. Full address of the principal registered or address you need to provide, and full address of foreign company office in India, right? So these are the documents. These are the ABC you need to provide. Shailendra Singh, sir, if a person or a company together hold share more than 50% of foreign company. Okay, so Shailendra, if a person or a company together hold share more than 50% of the foreign company, then what will happen? That company needs to comply whole Companies Act. We will assume that company was incorporated in India only. Means you need to comply from section 1 to section 470 of the Companies Act 2013. Either single if more than 50% or combination of both acquire more than 50%, then that provision will apply. Shailendra, I think your doubt is clear. Shailendra, your doubt is clear, I think so. Okay. So section 380, we need to provide certain documents to the ROC, Registrar of Companies. First is memorandum article copy in English language. And if that document does not in a English language, in a foreign, the document prescribes in a foreign language, specified in a foreign language, then in that case, we need to provide the translation copy. First point. Second, full address of registered principal office outside India. Third, full address of foreign company office in India, in Delhi, Mumbai, Bangalore, right? You need to provide that address. So A, B, C point are clear. D point. Name, address of person resident in India, that is authorized to accept documents, notices in India. Right? Suppose, for example, 4 to 5 or 7 Chinese person incorporated a company. Pradeep, what is your doubt? Pradeep, what is your doubt? You can mention your doubt, Pradeep. Okay. So D point is you need to suppose, for example, 4 to 5 Chinese person incorporated company in India, and Chinese are almost similar, right? In the faces, we are not able to discriminate who is Ram, who is Shyam now. So So law has provided you need to provide the one person who is resident in India, Sharmaji. You need to provide the address of the Sharmaji, so that in that case, in some non-compliance, we will catch the Sharmaji and we will start the prosecution against the Sharmaji. Okay, so name, address of the person resident in India, that is authorized to accept documents, notices in India. Your company is starting a business in India. So on earlier occasions, say for example in 2017, before Corona wave, your company, any dates of opening, closing place in India in earlier time, so that you need to mention. Declaration that none of the directors are convicted, debarred from formation of company in India or abroad. Okay, Pradeep. So, Pradeep, this is a simple concept. Like, say, for example, your company is a Flipkart. First of all, Flipkart is a foreign company. Why? Because Flipkart is a foreign company incorporated outside India, Singapore. That company is actually incorporated in Singapore only. So this is the basic concept, right? Suppose, for example, you, Pradeep, and me, we both incorporated company outside India for the purpose of tax planning, right? And we both are resident in India, and we both are holding 51% of the share capital of the company. So now remember one point. If you are holding more than 50, if Indian citizens are holding more than 51% of the capital of any foreign company, then whole Companies Act you need to follow, right? Then whole Companies Act will apply on your company, not only section of foreign companies. Means you need to comply from section 1 to section 470. You need to comply all the section of Companies Act, because we will be assumed that your company is incorporated in India only. Pradeep, I think so now your doubt is clear. Right? We will assume that your company is actually incorporated in India. And for the incorporation in India, then you need to comply all the provision of Companies Act, including the foreign company section also. Still, you have any doubt, Pradeep? Okay. And other information you need to provide. E, list of directors, secretary of the company and their particulars. Okay, good. And other particulars like name, surname in full, father's, mother's, spouse name, date of birth, residential address, nationality, passport number, PAN, occupation, DINSEN, other directorship, secretary membership number, email ID, former name, surname in full. So you need to provide all the information with respect to KMP part. Right? This is the first chart of section 380. Right? You need to provide all the documents. Now, next chart. Above information must be delivered to ROC. In how many days? In 30 days. And 30 days will start from 30 days of establishment of place of business in India in form number FC01. Right? So all the documents, memorandum copy, registered office copy. Okay, Kartik, then it should comply Indian Companies Act and Foreign Country Companies Act also. Yes, yes, yes. Suppose your company is incorporated, Kartik, your company is incorporated in Singapore, right? And we both are holding more than 50% of the Singapore company shareholding part. So in that case, that Singapore incorporated company needs to comply Companies Act 2013 in our country for doing business in India. Because as per section 379, we are assuming your company is incorporated in India. We are assuming, right? And as you are actually incorporated in Singapore, so you need to comply the Singapore Companies Act also, right? Now, above information you need to deliver to the ROC. I think so, Kartik, doubt is clear, right? So above information you need to provide to ROC within 30 days of establishment of place in form number. What is the form number? FC01. Which is the form number? Kindly repeat. What is the purpose of form number FC01? What is actually FC01? FC stands for foreign company, and this is the first form, so we can calculate as a 01, right? So I think so that is clear, right? FC01 is clear. FC01 is clear. Yes or no? So you know the purpose of FC01? Kindly comment. We need to submit FC01 to the ROC within 30 days. Above documents plus form plus attested copy of approval from RBI under FEMA 1999 plus attested copy of approval from any other regulator. If no such approval is required, then declaration from authorized representative of such foreign company that has no approval is required. It means you need to provide this document to the ROC along with the any other approval you need to take from the RBI, from the FEMA, under the FEMA Act, that also you need to attach with this, right? These documents shall be delivered to ROC having jurisdiction over New Delhi, right? It means you need to provide this document to the Delhi ROC, right? Now, for what if foreign company which existed at the commencement of Companies Act 2013, it means August 2013, and which had not delivered the document shall continue to be subjected to Companies Act 1956, right? Okay. If there is any alteration in the document submitted above, it shall be delivered to ROC within 30 days of such alteration in form FC02 plus fees. Now you can remember two types of form under section 380. What is the purpose of FC1? What is the next form is FC2, right? FC1 for providing original documents for alteration part. FC2 is the form which you need to use, right? So FC1, FC2. And by default, both document needs to be provided within 30 days. One more thing. Don't mention in the examination 30 days from the date of incorporation. Don't try to mention that 30 days from the date of incorporation. You need to mention 30 days from the date of establishment of place of business in India. For example, your company was incorporated in, say, for example, 2015 in Switzerland. And now in 2022, your company is going to enter a new line of business in India. So that will be the establishment of place of business. We are not going to mention 30 days from the date of incorporation that your company is not incorporated in India, that is establishing a place of business in India. Now, if there is any alteration in the above submitted above, right, then in that case, you need to provide alteration has to be done with board meeting of directors or shareholder, board meeting of directors only. It shall be delivered to ROC within 30 days of such alteration in form FC20 plus fees, right? So form number, two types of form number we can recall in this provision in this section 380 part, right? Note. As per companies registration of foreign companies, Rules 2014, if any foreign company ceases to have a place of business in India, say for example, Ford. Let's take the example of Ford. It shall give notice to ROC, and from this date of giving notice, the obligation of the company to deliver any document to ROC shall cease as if it has no place in business in India, right? I think so. Section 380 is clear from charts. Now we are going to read this whole section from theory part, from our study material part. Certain documents needs to be delivered to registrar by foreign company. Section 380 subsection 1. You need not to remember the section subsection part. If you can recall this section, then 2 it is best. Every foreign company shall, within 30 days of establishment of its place of business in India, deliver to the registrar for registration certified copy of memorandum article, full address of registered or principal office of the company, a list of director secretary of the company containing such particular as may be prescribed in relation to natures of particulars to be provided as above. The company registration of foreign company rules 2014 provide that the list of directors secretary equivalent by whatever name called of the foreign company shall contain the following information. You need to provide this type of information for the director secretary, means kind of all information, right? Again, D point, the name and address of the name or address of one or more person resident in India or authorized to accept on behalf of the company service of processes, any notices, other documents required to be served on the company, full address of the office of the company in India, which is deemed to be the principal place of business in India. You need to provide that also. Particulars of opening, closing of a place of business in India on earlier occasions or occasions. Declaration that none of the director of the company or the authorized representative in India has ever been convicted or debarred from formation of companies management in India abroad, and any other information as may be prescribed, right? So that all information you need to provide. Form, procedures, time for making application, submission of prescribed document according to the company's registration of foreign companies. You need to provide the document in FC1, and in case of alteration, FC2. Time is specific within 30 days. In the case of FC1, 30 days from the date of establishment of principal place of business. And in case of FC2, that is alteration, 30 days from the date of alteration of respective documents. The above information shall be filed with the registrar within 30 days of the establishment of a place of business in India, in which form FC1, along with the prescribed fees, documents required to be furnished as provided under section 380 subsection 1. The application shall also be supported with an attested copy of approval from RBI under the FEMA Act or regulation, and also from other regulator if any. Approval is required by such foreign company to establish a place of business in India, and a declaration from the authorized representative of such foreign company that no such approval is required. Office where document to be delivered of fees for registration, where we need to deliver that document. According to the companies registration of foreign company rules 2014, any document which any foreign company is required to deliver to the registrar shall be delivered to the registrar having jurisdiction over New Delhi. So we need to provide one set of documents to the ROC New Delhi. It shall be accompanied with the prescribed fees. If any foreign company ceases to have a place of business in India, it shall forthwith give notice of the fact to the ROC. In case of any, if suppose for example, if a foreign company started a business in India, when by default, by any chance, by loss nature, by business loss, FC01 and FC01, FC1 is the same form number. Yes, correct, Shalendra. So we are regarding as a FC01. 01 and 1 both are same. From the date on which such notice, you need not to provide any, you need not to comply with any notice after your business is shut down from India. Under section 380 subsection 2, every foreign company existing at the commencement of the Companies Act 2013, which has not delivered to the registrar the documents particular subjected under section 592. 592 stand of Companies Act 1956, right? This section belongs to 1956 of foreign company. It shall continue to be subject to the obligation to deliver those documents as per section 1956. Means you need not to comply with the provision of delivering new document, again the old document to the new ROC. Form, procedures, time within which alteration in document, FC02. Section 380 subsection 3 provides that where any alteration is made or occurs in the documents delivered to the registrar under section 380, the foreign company shall within 30 days of such alteration deliver to the registrar for registration a return containing the particulars of the alteration in the prescribed form. You need to provide the document in the prescribed form. The Company Registration of Foreign Company Rules 2014 prescribes a specific form, and the specific form is FC02 or FC2 along with the prescribed fees. I think so. Section definition of foreign company, section 2 clause 42, section 379, section 380, both sections along with the definition, all is clear, right? Comment, kindly comment. Is there any doubt? Is there any doubt with respect to both the section along with the definition of this foreign company? Is there any doubt? Let me know. If you have any doubt, let me know with respect to this company. We need to solve the MCQ part also, right? Then I will ask the MCQ part. So is there any doubt with respect to definition of foreign company? Section 379, important concept, holding more than 50% of the capital by the Indian companies or citizens. Is there any doubt? Okay, Aniket, no doubt. Okay. What about others? What about others? It is all clear or it is all clear? All clear or all clear, right? Both are same in fact. Is there any doubt? Okay, so start the new section, right? So next section is section 381. No doubt, Satel. Okay, Pradeep, good. Okay, so we are going to start the section 381, and section 381 talks about the accounts of foreign company. Okay, for Indian company, which sections are applicable with respect to accounts of Indian companies? Kindly mention the section number of the Indian companies. Accounts, with respect to accounts section. From this section to this section applies to books of accounts of the company. Anyone can mention the section number of accounts of the Indian companies. Okay, so from section 128 to section 138 deals with the accounts. If you can recall, financial statement, books of accounts, 8 years, CSR, internal audit, financial statement need to be filed to the ROC, that all sections. Okay, 133. 133 is accounting standards, right? Okay, so section 381 talks about the accounts of foreign companies, section 381. First point, every FC stands for foreign company, shall prepare. Shall means compulsory. You don't have any option to prepare. You need to compulsory prepare and file with ROC a balance sheet, a P&L account. You need to prepare a balance sheet, a profit and loss account in such form as prescribed, containing such particulars as prescribed, including or attached such document as may be prescribed. So every foreign company shall prepare, file with the ROC a balance sheet and a P&L account. This is the first point, right? And this is the basic point. If that your balance sheet and P&L account is not in an English language, in that case you need to provide a certified translation copy. Central government may exempt any foreign company or a class of foreign company. Central government may exempt any foreign company or a class of foreign companies from the filing requirement. These copies of balance sheet P&L shall be delivered to ROC in every year. Obviously, our Indian company needs to submit financial statements to the ROC every year. So in that same case, which form? So form number will be the same, right? AOC and MGT. Concept will be the same. Form number FC3, right? Disclaimer, like for example, you are doing your business in India, your company is a foreign company. So what type of disclosure you need to make? Same as applicable in case of Indian company in AOC MGT form, right? But the form is different. FC3, the format is prescribed in FC3 part. Okay, so every foreign company shall prepare a list of all the places of business established in India in form number FC3. For Indian company, they are filing the document in MGT 7 and AOC 4. If you can recall, MGT 7, section 92 talks about the annual return part, and section AOC 4 talks about the 137, right? For in case of Indian companies filing documents to ROC. Now, for foreign company, this is the document FC3, FC03, FC3 we can call, no issues at all, right? So every foreign company shall prepare a list of all places of business established in India in form FC3 as on the balance sheet date must be filed with the ROC along with the balance sheet and P&L. You need to provide that document. Now, if you can recall the provisions, right? Financial statement of Indian business operation shall be in same form as applicable to Schedule 3 to the extent possible. Document should be filed within 6 months of close of financial year, means 30th September. Means 30th September. Extension applicable can be made by the foreign companies, and if there is a justifiable reason for. So in that case, means the documents which needs to be filed with the foreign company or with the ROC of the foreign companies. So that document belongs to Schedule 3 only, right? All such documents as are required to be annexed to financial statement of a company as per section 128 to section 138. It means whatever section are applicable over the Indian companies with respect to filing of document, same section, same set of sections will apply to the foreign company also. You need to comply from section 128 to section 138. Okay. So there's a question from Karthik. Then registrar of companies will issue SIN number to the foreign companies. Remember, Karthik, one more thing. In India, foreign companies are doing business via incorporating private limited company, right? In India, foreign companies are doing business by incorporating private limited company. If you can recall, if you can check, there is a PepsiCo India Private Limited. Same happened with the Flipkart also, right? So there are a number of companies which are doing business in India, and they are incorporated private company only, right? This is the first point. So obviously SIN will be allotted to this company also. Extension, it may be granted by the ROC for a maximum 3 months. Extension with respect to financial statement. All such documents relating to the CFS. CFS stands for Consolidated Financial Statement of a parent foreign company. Parent foreign company means you are incorporated a private limited in India. You are doing business by incorporating a private limited in India, and your company having its business in parent foreign company in Singapore only. Like in case of Google, as submitted by company in the country of incorporation, Singapore. For example, Singapore. Like for example, Flipkart shall also be filed accounts pertaining to Indian business operations. Like for example, you need to comply the Singapore law also. Flipkart need to comply the Singapore law also. In that case, you need to provide the accounts pertaining to the Indian business operation, which are audited by practicing CA in India or from a LP practicing CAs, right? So you need to provide these documents audited by the Indian operations that needs to incorporated with the foreign parent company also. Company shall also file along with the financial statement a statement with respect to related party transaction. Related party transaction means in section 188, Repatriation of profit or transfer of fund, repatriation of profit, FEMA you need to comply. Provision of Companies Act means section 128 to 148 along with the rules 128 to 138 deals with the books of accounts, and from 139 to 148 deals with the accounts auditor parts, right? So that also you need to comply, right? This is a section 381. So section 381 talks about like preparation of accounts of the foreign company, right? Now start with the theoretical part from our study material. Accounts of foreign company section is 381, right? You need to remember one form, that is FC3. According to this section, every foreign company in every calendar year means January to December, make out the balance sheet, profit and loss account in such form containing such particulars, including having attached to the documents, deliver a copy of these documents to the ROC. According to the rules, every foreign company shall prepare financial statement of its Indian business operations in accordance with Schedule 3 as applicable, and documents that are required to be annexed shall be in accordance with the Chapter 9, that is Accounts of Company, means section 128 to section 138. The documents relating to copies of latest consolidated CFS of the parent foreign company as submitted to the prescribed authority by the parent company, that also needs to apply, that also needs to attach with respect to Indian business operations also. Note, financial year in relation to any company or a body corporate means the period ending on 31st day of March every year, means from April to March, and where it is incorporated on after that. This is the definition of financial year, right? Financial year definition we all can recall. Like financial year definition, first point is if year starts from April to March, or in second point, if a company is incorporated after 1st January, then your financial year will end to the next following 31st March. Means for first year you can prepare 15-month accounts also. The period starting on the 31st March of the following year in respect where financial statement or a body corporate is made up, provided that where a company or a body corporate which is a holding company or a subsidiary or an associate company of a company incorporated outside India is required to follow a different financial year for consolidation of its account outside India, central government may allow any period as a financial year, whether or not period is a year or not, with respect to financial year definition. Provided further that any application pending before the tribunal as on the date of Companies Ordinance 2018 shall be disposed of by the tribunal in accordance with the applicable rule before such commencement. Till this section, if you have any doubt, you can ask it out. It is important to note that foreign company having a place of business in India may not necessarily follow financial year. Obviously, they will not follow, because in outside India, they are following to Jan to December part. If your documents are not in the English language, for example, your company is incorporated in Germany, so your document reflects the German language. In that case, you need to provide the translation copy. Every foreign company shall send to the registrar along with the documents required to be delivered to him a copy of list of circulars, right? What all documents you have provided along with the form. Every foreign company shall file with the registrar. Remember FC1, FC2 form, and this is FC3. Registrar along with the financial statement in form FC3 along with the fees, a list of all the places of business established by the foreign company in India as on the balance sheet date. You need to provide that information also. Related party transaction, repatriation of profit, transfer of fund, including dividend also. And that all documents you need to provide. Relaxation can be provided by ROC for a maximum period of 3 months. Audit of accounts of foreign company. Every foreign company shall get its accounts audited pertaining to Indian business by practicing CA or a LLP of a practicing CAs. Audit and accounts and rules made thereunder as far as applicable. These all are applicable to the foreign company. Means from section 128 to section 148 that all sections will apply to the foreign company also. So in section 381, is there any doubt in section 381? If you have any doubt in section 381, if you have any doubt in section 381, is there any doubt in section 381? Later on, we will solve the MCQs also, right? From whole foreign company part. Is there any doubt? Okay. Move towards the next section. 381. Then next is 382. Now, section 382, display of name, etc. of foreign company. Section 382. It is a duty of the foreign company to exhibit its name outside place of business, name of the foreign company, your name of the foreign company, in which country your company was incorporated, you need to provide the name of your country, and fact that your liability is limited. This is the most important. These must be exhibited in English or one or more local language in case of foreign company. On every bill and letter, etc., name of the foreign company you need to provide, country of incorporation, fact that liability is limited. These must be exhibited in all the letter papers, business letters, bill heads, in all notices, other publications of a country in English language. Right? So these are the 4 sections of foreign company, section 379, 380, 381, 382. Now we will do one thing. We will do the this part. Okay, let's start solving some MCQ part. So can we start the MCQ part? Yes or no? Yes or no? Can we solve some MCQ part? Okay. So first question is IPL Limited incorporated outside India, having place of business in India. IPL Limited incorporated outside India, having place of business in India, and 60% of the paid up share capital held by one or more citizens of India. State the type of company, right? What is the type of the company? It is an Indian company, first option. Second option, it is a foreign company. Third option, it's a deemed Indian company. Fourth option, none of the above. So yes, okay. So what is the correct answer of IPL Limited, right? Option 1, option 2, option 3, option 4. Option 1, 2, 3. Indian company, foreign company, deemed Indian company means that is company incorporated in India or none of the above. Which one is the correct one? Okay, so Aniket, option 3rd. Arey, Pradeep, option 2. Okay. Karthik, deemed Indian company. Okay. Pradeep, so if any Indian citizen or a company incorporated in India or a body corporated in India, as per section 379, hold more than 50% of the capital, that company is assumed to be incorporated in India only, means deemed Indian company. So option 3rd is the correct one, right? This is the correct one. Deemed Indian company is the correct one. This is the correct answer. So do you have any doubt? Do you have any doubt with respect to this? Do you have any doubt with respect to question number 1? With respect to question number 1. Is there any doubt with respect to question 1? I think so, Pradeep. Now it is clear, right? Bhaumik, now it is clear, right? Okay. Question number 2. Move towards the question number 2. Second question. If minimum 50% of the paid up share capital of the foreign company is held by dash, then provision of Companies Act 2013 shall not apply. Right? Shall held by, then provision of Companies Act 2013 shall not apply. First point. First option, one or more citizens or citizens of Indian company. Remember one thing, read out question very carefully. Aniket bhai, you provided the answer of which one? Question number first or second? Okay, one or more citizens of country, one or more companies incorporated in India, one or more body corporated in India, none of the above. So what is the correct one? Which one is the correct one? Companies Act will not apply. Okay. So Aniket, okay, Aniket. Okay, I got the answer of Aniket. Okay, what about others? Aniket, your answer is correct. Okay, what about others? What about others? Okay, none of this. Perfect, Karthik, perfect, Pradeep. Okay, so answer is none of the above, right? Perfect. Third question. Filing of details of foreign company under section 380 are in the form, right? You need to provide certain documents to the ROC of Delhi, right? For example, memorandum copy. For example, article copy as per section 380. For example, list of places in India. For example, your registered office place. Shall perfect. Okay. So question number third, which form needs to be used? FC1, FC2, FC3, FC4. चार ऑप्शंस हैं आपके पास. Option 1, 2, 3, 4. Which form is applicable for filing these foreign company forms? FC1, FC2, FC3, FC4. Which are applicable? Correct one. FC1, 1. बहुत बढ़िया. Good. All are correct, right? So FC1 is the correct one. Now, next question. Okay. HUL is a foreign company and seeks to know which of the following will apply. Which of the following will apply? Seeks to know which of the following sections shall apply. Comment. Section 171 related to debenture. Okay, so we need to remember this. We need to learn this section first. It's 384 will be there, right? Okay, so now move towards the next section part. Section 380 is there. 383 is there. 383 talks about service of document on foreign company part. So like we are going to start the section 383. So section 383 talks about service of document on foreign company. Means ROC willing to provide certain documents to the foreign company. ROC wants to give any notice or something or any document, process document required to be served on foreign company shall deem to be sufficiently served if addressed to any person whose name and address were delivered to ROC under section 380, authorized person in India, registered authorized person resident in India. Remember that point, Sharma ji? Left at or by post to address which was delivered to ROC or by any electronic mode. Now, section 384. 384, little bit important section. Debentures, section 71. Annual return, section 92. Registration of charges, section 77 to section 87. Books of account, section 128 to 138. And the inspection, section 206. So these are the list of section. Provision of section 71. Issue of debenture means if your company is willing to issue any debenture and you are taking the money from the Indians, so in that case you need to comply the section 71 issue of debenture provision DRR banao. all provisions of this section 71. Section 92, preparation and filing of annual return MGT 7. Section 128, books of account you need to prepare as per section 128 to section 138. Again, AOC 4. Provision related to registration of charges. If you have created any charge, means you had taken any loan from any bank or financial institution. For this, you need to comply the provision of charge. You need to create a charge in 30 days. So in that case, section 77 will apply. Provision related to inspection, inquiry, investigation from section 2062 to 28 will apply. You need to comply this section also. As applicable to Indian company are also applicable to foreign company to the extent possible. Provision relating to CSR, and CSR is talking in section 135, are also applicable to foreign company. If you can read the foreign CSR provision, every company, they have mentioned word every company. Foreign company is a company, so you need to provide. If you are coming with the limits of that section 135 applicability, then again you need to provide 2% chanda for the public bhalai, right? Are also applicable to foreign company as they are applicable to Indian company. और इनसे तो लेना ही चाहिए, subject to some exceptions or modifications. According to Rule 7 of companies, registration of foreign company rules 2014, every foreign company shall prepare an annual return in form FC4, FC4 annual return form, FC3 list of businesses, right? And file it to the ROC within 30 days, within 60 days of the last day of FY. It should contain the particulars. Now remember one thing, for the companies incorporated in India, time limit is same. There is also 60 days from the date of AGM. And in that case, 60 days of the last day of the financial year, right? This is the difference, first difference. Second difference, in this company, there is a form FC4 and there is a form MGT 7 or 7A. If your company is a small company, then 7A. Other than a small company, it's MGT 7 form. Time period is 60 days, right? So this is your section 384. Okay, and 385, there is a single line. This is the best section, which you need not to remember anytime. Prescribed fees must be paid by foreign company to ROC while registering any documents. Okay, so move towards the theoretical part. Okay, 382. Display of name of foreign company, conspicuously exhibit on the outside of every office place. Okay, just a minute. Okay, so these are the theoretical provisions. Okay, so you need to display your documents, certain documents conspicuously exhibit, means it should be by default that everyone can see. On the outside of every office or place where it carries on the business in India, name of the company and the country in which it is incorporated in letters, especially legible. You are not using cursive language, right? In English characters and also in the characters of the language or one or more language in general used in the locality in which the office or place is situated. Cause the name of the company or of the country in which the company is incorporated to be stated in the legible English character in all the business letters, bill heads, letter paper, and in all the invoices, other officials, publications of the company, and if the liability of the member of the limited, so cause notice of that fact to be stated in every prospectus issued and all the business letters, bill heads, letter paper, notices, advertisement, such official publication of the company in the English character only. This is the important point. And if it is not possible, then you need to provide the translation copy. Service on foreign company, right? If you need to certain document to the foreign company, you need to provide the document to the Sharmaji. Any process, notice, other documents required to be served on a foreign company shall be deemed to be sufficiently served if addressed to any person whose name, address have been delivered to the registrar under section 380 and left at or sent by post to the address which have been so delivered to the registrar or by electronic mode. Now, 384 is applicability of other section part, debenture, annual return, registration of charge, books of accounts, and their inspection part. 71 debenture, 92 annual return, and section 135 belongs to CSR shell. Subject to some exception, modification, adaptation as may be made therein, the rules made under section apply to the foreign company as they were applied to a company incorporated in India, and you need to provide an FC4 form within 60 days. And this is the most important point, from the last day of financial year. This is the major difference between filing of annual return of an Indian company and filing of annual return of a foreign company in FC4 to the registrar containing the particular as they stood on the close of financial year. The provision of section 128, books of accounts, etc. Books of account, etc. to be kept by the company shall apply to the foreign company to the extent of requiring to be kept in a principal place of business in India. And the books of account referred to in this section with respect to money received, spent, sales, purchase, assets, liabilities, and chapter registration of charges and inspection, inquiry, and investigation will also apply. And 385 deals with the fees you need to pay as per the registration part. Okay. Okay. So now go back to the duty to exhibit its name, etc. and bill is a local language. Yes, correct, Shaleen. In local language, in English language, and in local language also, right? Okay. So now move towards the MCQ part. HUL Limited is a foreign company and seeks to know which of the following sections shall apply. Okay. Now you can easily comment. Section 71 debenture, 128 relating to books of accounts, 135 respect to CSR, all of the above. So the correct option is first, second, third, fourth. HUL needs to comply which section? 71. Move towards the next question. Okay, 387. That belongs to 387. Okay. Question number 7. Question number 7. Right? Start. TILT Limited is a company incorporated in India, having place of business in Mexico. Perfect. Company. Remember the question is on different pace, right? TILT, Tilt Limited, is a company incorporated in India. In the concept of foreign company, this question belongs to company incorporated in India only, having a place of business in Mexico, of which 45% of capital is held by Mr. Pankaj, an Indian citizen. State the law applicable of TILT. Applicable to TILT. Okay. So which law is applicable? Companies Act 2030, chapter of foreign company, deemed Indian company, or none of the above? Little bit tricky question, simple question, right? Remember one thing, companies incorporated in India and Mexico, place of business in Mexico. Okay, so correct is option 1. We first, second, third, fourth. Aniket, I got your answer. Your answer is correct. What about others? What about others? What about others? What about others? Okay, all are correct. Perfect, right? Companies Act 2013. Okay, next question. If minimum 50% of the paid up share capital, if minimum, okay, no doubt, if minimum 50% of the paid up share capital of the foreign company is held by following, then provision of Companies Act 2013 shall not apply. First option, one or more companies in India, Okay. One or more companies that need not to apply, right? One or more citizens or citizens of India, one or more body corporate, none of the above. Okay. So if minimum 50% of the paid-up capital of foreign companies held by the following, then provision of Companies Act 2013 shall not apply. So correct option is option. Okay, Aniket, I got your answer, and your answer is correct. Okay, Aniket is rocking, right? Aniket, your answer is correct. Aniket can try KBC also, right? Okay. What about others? Faster finger, he will get the option. Option D, Bhomik, perfect. Okay. So correct answer is none of the above. Okay. Next question is, under the Companies Act 2013, dash shall be considered as a foreign LLP. Foreign LLP, subsidiary of Indian company, none of the above. You need to apply a little bit your mind. Under the Companies Act 2013, A dash shall be considered as a foreign LLP. Subsidiary of Indian company will not be, we can call it a foreign company, right? Indian company, we cannot be called, none of the above. Okay. Aniket will try after ICI. Okay, after CA. Perfect. Okay. Shalendra bhai. Under the Companies Act, dash foreign company shall be considered as a foreign LLP, right? So correct answer is foreign LLP. Foreign LLP shall be considered as a foreign LLP, right? Okay, so now move towards this one, right? So we will do one thing. We will take a 10 minutes break here. Okay. So it's 7:25. Okay. So we will back by 7:35. We will take a 10 minutes break here. Then we will back by 7:35. section. Can we start the next section? 386 deals with the interpretation part. Okay. Section 387. Can we start the section 387? Yes or no? Can we start the section 387? Yes. Okay. Let's start the section 387, and section 387 deals with dating of prospectus and particulars to be. Dating means वो वाला dating नहीं होता है. Dating means we need to provide a particular date on the prospectus so that the provisions will be effective from that date only. This section is applicable to any prospectus issued by a company that is incorporated outside India, means foreign company, or to be incorporated outside India. No person shall issue, circulate, distribute in India any prospectus to subscribe for securities of a company incorporated outside India unless it is dated and signed. Means that document, that prospectus should be dated and should be signed. It shall contain the details, namely what details you need to attach in the prospectus. First is law under which company was incorporated. This is the first point. Indian address where document can be inspected. This is the second point. Date and country of incorporation. This is the third point. And third, disclosure kind of in the prospectus. Fourth is address of the principal office in India, Delhi, Bangalore, Mumbai. Instrument defined in the constitution means MOA, right? So you need to provide all the document, you need to provide all the disclosures information in the prospectus part, right? First point is under which law your company was incorporated. Second is Indian address where document can be inspected. If some particular authority or some person who subscribed the shares of the company on the basis of that prospectus, if that person wants to inspect the documents, so on what address he will come. Date and country of incorporation, you need to provide the information. Address of principal office in India along with the memorandum of association you need to provide. Now, for Indian companies, section 26 provide information needs to be disclosed in the prospectus. Right. So again, for the foreign company, as per section 387, they have just slightly included. It should contain the matters as specified under section 26. Matters to be mentioned in prospectus for foreign company also. What kind of disclosure needs to be provided by the foreign company? So law has provided whatever mentioned in section 26. All the above condition must be compulsorily complied with. Application form will be accompanied with the prospectus, right? So law has prescribed you need to provide all the document must be compulsory complied with, along with the application form that should be accompanied with the prospectus. So the person who wants to apply, he can just fill out the application and send back to the company for the purpose of allotment and issue. So this is section 387, and 387 talks about disclosures need to be made in the prospectus part. Along with these disclosures, you need to comply the section 26 disclosures also. Section 387, dating of prospectus and the particulars to be contained therein. Section is 387. According to this section, prospectus to be dated, it should be signed. No person shall issue, circulate, distribute in India any prospectus offering to subscribe for securities of a company incorporated or to be incorporated outside India, whether the company has or has not established, or when formed will or will not establish a place of business in India, unless the prospectus is dated and signed and contains with respect to particular matters. First is constitution of the company, means memorandum, MOA, AOA, you need to provide. This is the first provision. Second, the enactment and provision by under which the incorporation of the company was affected. Address in India, where the said instruments and enactment or provisions or copies thereof, and if the same are not in the English language, a certified translation thereof in the English language can be inspected. The date on which and the country in which the company would be and was incorporated, and whether the company has established a place of business in India, and if so, the address of its principal place in India that you need to provide. And states the matters specified under section 26. Matters to be stated in prospectus that you need to provide, right? Provided that point 1, 2, 3 of point A. This, right? 1, 2, 3 means these points. Above shall not apply in case of prospectus issued more than 2 years after the date at which the company is entitled to commence the business. Then the disclosure is not required because that is automatically covered. It was previously. Example. Mere company LLC, a company incorporated. Okay, in the foreign company they use the word LLC, right? Now, not private limited or limited, right? A company incorporated in Dubai on 28th November 2017. Mere company LLC has established a place of business in Mumbai in the year 2020. Now, the place of business in India proposes to offer subscription to securities of mere company LLC. Now, the place of business in India, before going with the subscription, will have to file a prospectus dated signed, and the prospectus shall not be required to contain the particulars mentioned in point 1, 2, 3. The reason is simple. Your company was incorporated before 3 years. Now, so you need not to provide the MOA of the company and enactment under which the company was incorporated or address in India. No waiver of compliance in prospectus. Section 387, subsection 2. Any condition requiring or binding an applicant for securities to waive the compliance with any requirement imposed. For example, this provision is intentionally brought by the enactment. Is the reason simple, like whatever is required in the prospectus, that should be disclosed in the prospectus. And if anything is a non-compliance, then it will be treated as a non-compliance only, right? So that's why the law has mentioned any condition requiring or binding an applicant for securities to waive compliance. Law has clearly mentioned that condition will have a null and void effect imposed by the virtue of section 387(1) or purporting to impute him with a notice of any contract, documents, or matter not specifically referred to in the prospectus shall be void. That condition will be void. It is to be understood that section 387(2) does not provide any exception with respect to the non-compliance of the requirement stated under section 387(1) by any person responsible for issuing or circulating prospectus. Form of application for securities to be issued along with the prospectus. No person shall issue to any person in India a form of application for securities of such a company, intended company as mentioned under section 387(1), unless the form is issued with a prospectus which comply with the chapter 22 of the Companies Act. And such issue does not contravene the section of 388. 387 subsection 4 provide further that the provision of section 387 shall not apply to the issue to existing members. Means you need not to provide these all disclosures when your company is planning to issue shares or debentures to the existing member or debenture. You need not to provide all the information, right? Same as mentioned in normal prospectus provisions also, which were applicable to the Indian companies. Debenture holders of the company, existing member and debenture holders of the company of a prospectus or a form of application relating to securities of a company, whether an applicant for securities will or will not have a right to renounce in favor of the other person. Except in or so far as it requires a prospectus to be dated or to the issue of prospectus relating to securities which are to be in the form of unified with respect to previously issued, means there are no new securities are issued. So this is your section 387. Okay. So is there any issue in section 387? Is there any issue in section 387? Is there any doubt in section 387? Is there any doubt in section 387? Is there any doubt in section 387? If you have any doubt, let me know. Is there any doubt in section 387? Okay, perfect. Okay, so move towards the section 388, and 388 talks about the expert consent and allotment, right? If you can recall in the CA inter part also, there is the concept of expert consent. No person shall issue, circulate, distribute in India any prospectus. You can distribute in Maldives, we don't have any problem. But if you are circulating if you are issuing or Shailendra, deemed a company issued prospectus inviting subscription in India, not state country name in which incorporated, then what will happen? Don't worry, we have a penalty section also, right? In that case, we will apply the penalty part. Okay. Okay, so no person shall issue, circulate, distribute in India any prospectus if expert has not given his written consent. You need to obtain the written consent from the expert. First point. Second point, expert has provided his written consent, but he has not withdrawn. Expert has withdrawn his consent before registration of prospectus. Then also your company will not issue prospectus. Means if he has not withdrawn, then you can apply. Prospectus does not contain a statement that expert has given his consent, has not withdrawn, right? In that all the cases, company will not issue, will not circulate, will not distribute in India any prospectus issued. I think so. This concept is very well clear. Next, expert statement is deemed to be included in the prospectus if it is contained in any report reference to the same is given. So this is your section 388. Okay, provision as to the expert's consent and allotment. Section is 388. Okay, according to this section, no person shall issue, circulate, distribute in India any prospectus offering for subscription in securities of a company incorporated to be incorporated outside India, whether the company has or has not established, or when formed will or will not establish a place of business in India. If where the prospectus includes a statement purporting to be made by the expert, he has not given the consent or has delivery of the prospectus for registration withdrawn his consent, then also there is a problem, right? Withdrawn his written consent to the issue of prospectus with the statement included in the form or context in which it is included, or there does not appear in the prospectus a statement that he has given and not withdrawn his consent as a foresight, or if the prospectus does not have the effect where an application is made pursuant of rendering all persons concerned bound by the provision of section 33, means issue of security, or section 40, stock exchange listing. So far, for the purpose of this section, a statement shall be deemed to be included in the prospectus if it is contained in any report or memorandum, right? So is there any issue in section 388 talks about the expert consent only? So is there any problem? 388. Section 388. Section 388. Section 388. If possible, kindly share chart which contains penalty section. Don't worry, it will come. It will come. This is your penalty chart. Okay. Okay, so this is your 392 is your penalty chart. Karthik, here 392 is your penalty chart. Shalin, 392 is your penalty chart, right? For any contravention of this chapter. Okay, so is there any problem in section 388? Is there any problem in section 388? Is there any problem in section 388? Okay. Expert means professional. No, expert means any person whose profession gives you opportunity to provide your opinion, like us, like engineers, they are also experts, like doctors, they are also experts, right? So expert means a person whose profession gives you the permission to provide your expression. Like in case of life insurance, actually is an expert. In case of diamond valuation, the person who is having the knowledge of analyzing the diamond in like how many carats that is involved, he is expert, right? So expert means it is not like the professional only. Okay, so next is section 389. 389 stands for registration of prospectus. Before issuing, distributing, circulating of prospectus, foreign FC stands for foreign company, shall deliver to the ROC certified copy of the prospectus. You need to provide, state on the face of it that it has been delivered, expert consent as under section 388 attached to the prospectus, and any other document as may be prescribed, and this is prescribed under the rules. Rule is 11. Expert consent for issue of prospectus. You need to attach copy of contract, memorandum for appointment of MD, manager, giving full details. You need to provide that also. Underwriting agreement, copy of power of attorney if prospectus is signed by authorized agent of director, copy of any material contract other than those entered in the ordinary course of business within the last 2 years that needs to provide, right? So these are the document you need to provide under as per rule 11. Now, copy of prospectus shall be certified by chairperson of the company and the 2 other directors also. Chairperson of the company and 2 other directors of the company. This is your section 389. Okay. So section 389 talks about registration of prospectus. According to this section starts in a negative sense. No person shall issue, circulate, distribute in India any prospectus offering for subscription in the securities of the company incorporated or to be incorporated outside India, whether the company has or has not established or when formed will or will not establish a place of business in India, unless before the issue, circulation, distribution of the prospectus in India, you need to provide a chairman signed copy along with the two other directors of the company as having been approved by the resolution of the managing board body has been delivered to the ROC. The prospectus states on the face of it that a copy has been so delivered and there is a endorsed on or attached to the copy any consent to the issue of prospectus as required by section 388. According to the company's registration of foreign companies rules 2014, the following document shall be annexed to the prospectus, namely any consent to the issue of prospectus, a copy of contract for appointment of MD manager in case if it is not in writing, you need to provide all the conditions. A copy of any material contract not entered in the ordinary course of business but entered within the preceding 2 years, you need to provide that copy also. Underwriting, you have entered any underwriting contract for the purpose of avoiding any kind of under subscription, then that copy of underwriter also you need to provide. A copy of POA if prospectus is signed through duly authorized agent of directors. So this is your section 389. Is there any problem in section 389? Is there any problem in section 389? Yes or no? Is there any problem in section 389? Okay. Okay. Now, section 390 talks about the IDR. Now, offer of IDR, Indian Depository Receipts. So there's a concept of GDR, there's a concept of ADR, there's a concept of IDR. So what is ADR? What is ADR? What is ADR? ADR stands for what? Don't tell me the full form of ADR. ADR means ADR means American Depository Receipts. Karthik, what exactly ADR stands for? This is a full form, right? American Depository Receipts. So ADR is if an Indian company, if a Reliance wants to raise money from America, right? So they will issue via the depository ADR in America. If a Reliance wants to raise money other than America, they will issue a GDR, Global Depository Receipts. Now vice versa. IDR stands for if a Microsoft wants to raise money from India, from Indian public, right? Then they will issue IDR. So IDR is section 390, right? Section 390. Deposit in USA. No, it's not a deposit. It's a raising of money. Okay. IDR stands for, this is a reverse concept of ADR and GDR. So if a foreign company wants to raise money from India, from Indian public, then they will raise that money by the issue of IDR, Indian Depository Receipts. IDR are instruments which are in the form of receipts created by domestic depository in India and authorized by a company incorporated outside India. Right? IDR are instruments which are in the form of receipts created by domestic depository in India, authorized by a company incorporated outside India. Concept of IDR in simple language. This is the most important, right? Foreign company. Foreign company means foreign company which is incorporated outside India wants to raise funds from India. Therefore, it issues shares to depository in India. Such a depository keep the shares of foreign company with itself, and in conversion of this, issue IDR denominated in rupees to Indian investors. Such investors' money is invested in IDR, which is ultimately passes on to the foreign company by the depository by directing their charges. Central government make rules for offer of IDR, manner in which IDR shall be dealt in, manner of sale, transfer, transmission of IDR, requirement of disclosures in the prospectus, etc. Section is 390. Right? Now, this is section is 390, deals with the IDR concept. For the purpose of this section, according to company registration of foreign company rules, 2014, IDR means an instrument in the form of a depository receipts created by a domestic depository in India, authorized by a company incorporated outside India, making an issue of such depository receipts. According to section 390, notwithstanding anything contained in any other law for the time being in force, the central government make rules applicable for offer of IDR. For this, central government provide the rules. Requirement of disclosure in the prospectus or letter of offer issued in connection with the IDR. Manner in which IDR shall be dealt with. Remember one thing, GDR, ADR is a little bit easy, but IDR is more complicated because you are taking money from Indians. The manner of sale, transfer, transmission of IDR by a company incorporated or to be incorporated outside India, whether the company has or has not established or will not establish any place of business in India. According to companies, registration of foreign company rules 2014, no company. Again, the provision start with the negative sense. No company incorporated or to be incorporated outside India, whether the company has or has not established or may not establish any place of business in India, shall not make an issue of IDR unless you have complied with the SEBI rules, any direction issued by the RBI. Without following the directions of the SEBI, RBI, you are not supposed to take a single pie from the Indian investors. Correct? This is the concept. The rules relating to offer, disclosure, requirements, and manner of transfer, sale, etc. related to IDR are contained in company's registration of foreign company rules 2014. Application of chapter 15 means compromise, arrangement, amalgamation. Section 234 part deals with the merger amalgamation of Indian company and foreign company. Foreign company acquired Indian company acquired the foreign company. Means merger amalgamation. So section 234 states that the rules provide for the scheme of merger amalgamation between company registered under this act. Bole to Companies Act 2013 and company incorporated jurisdiction of such countries as may be notified by CG with the consultation of RBI. And this is 234 part, right? Okay. Now, section 391 talks about provision of section 3436. 3436 deal with the misstatement in prospectus. Civil liability, criminal liability, civil liability. This is the provision. issue of prospectus by a company incorporated outside India under section 389. Issue of IDR by a foreign company means if any foreign company wants to issue a prospectus or issue of IDR, you need to comply 34, 35, 36. Subject to section 376. The provision of chapter 20, that is winding up, shall apply for a closure of a place of business of a foreign company in India as if it were a company incorporated in India, in case such foreign company has raised money through offer, issue of securities which have not been repaid or redeemed. Right? For this, section 376 will apply, and you need to comply 34, 35, and 36. Okay, section 390 talks about the penalty part. So if any person contravenes the provision of chapter foreign company shall be punishable with fine 1 lakh to 3 lakh, additional fine 50,000 rupees per day. Every officer of the foreign company 25,000 to 5 lakh rupees. I think so. Fine section is comfortable. If any person contravenes the whole chapter section of this chapter, then foreign company shall be punishable with fine 1 lakh to 3 lakh rupees. If they continue the failure part, right? In this case, if the default continues, then 50,000 rupees per day penalty part. And if any officer in default, Sharmaji, then 25,000 to 5 lakh. Company failure to comply with the provision of this chapter not to affect validity of contract under section 393. So if any company fails to comply with this chapter, it shall not affect validity of any contract entered by the foreign company. Obviously, company may be sued. We can file a case against the foreign company, and company cannot claim any set off, make any counter claim, institute legal proceedings for this contract transaction until it has complied with the relevant provision. And this is your section. Section 376. Little bit out of the track, but then to deals with the foreign company. That's why I'm discussing. This is section 376. And section 376 talks about power to wind up foreign company, although dissolved. There are body corporated incorporated outside India, which has been carrying on business in India, ceases to business in India, it may be wound up as an unregistered company. Means you are not incorporated, you are not registered in India. So that's why on the winding up time, you will be treated as an unregistered company, and your winding up will proceed in that way only, which deals with company authorized to register under the Act notwithstanding, in spite that the body corporate has been dissolved, ceased to exit order law of the country order which it was incorporated. Rule 12. If any person, trade, carrying on business in any manner under any name or title or description of the foreign company, registered under the Act or rules, that person, each of those persons shall, unless delivered registered as a foreign company under the Act rules, liable to be investigated by section as per section 210. And section 210 talks about investigation by central government, right? So in that case, central government will order for investigation part. Okay, so these all are your charts. Now, theory part, section 391, these sections will apply 34, 35, 36. Okay, and this is your penalty part. 1 lakh to 3 lakh rupees in case of foreign company, in case of continuing failure, 50,000 rupees per day, or in case of person, so it's 25,000 to 5 lakh rupees. Thus, the punishment can be summed up like this only. Okay. Company fails to comply, that will not affect. The central government exemption under this chapter, exempt any class of foreign company incorporated outside India. So government can exempt also. Now we have some questions. till this topic, if you have any doubt, let me know. Till this topic, if you have any doubt, let me know. Otherwise, we can start the question answer part. Is there any doubt from section 379 or definition 2 clause 42 till section 393? Is there any? Penalty is also quite simple, right? 1 lakh to 3 lakh, 50,000 rupees, 25,000 to 5 lakh rupees. 392 penalty deals with the 392. Okay. So is there any doubt from section 379 for all section penalties applicable? Yes. For all section penalties applicable. All section means foreign company sections, right? Karthik. Next doubt. Next doubt. So is there any doubt? We can proceed towards solving the questions. Okay. Okay. So let's start. First question. First question of the study material आपकी screen पर ये रहा. First question. ABC Limited, a foreign company having its Indian place of business in India at Kolkata, Mamta aunty, right? West Bengal is required to deliver various documents to ROC. Okay, this is section 380. You are required to state whether the said company should deliver the document. My question is, in which form? In which form? In which form? Criminal and civil liability. In criminal liability, there is a provision for imprisonment also. In civil liability, there is a fine provision only, as per section 34 and 35 of Companies Act. Okay, so question 1, first part, FC1, बहुत बढ़िया, good. Okay, so we need to deliver all the document like memorandum of association, registered office of the company incorporated outside India, शर्मा जी का नाम, ये सब चीजें देनी है. Second, in case a foreign company does not deliver document to the registrar as required by section 380, state the penalties prescribed. Now tell me, right? Now tell me how much is the penalty amount? So there is a question from Geeta, how ADR, GDR, IDR under Companies Act? No, basically ADR is not in the Companies Act, right? For GDR, there is a section 41. For IDR, there is a section 90, because you need to comply the Companies Act part also, right? Because the companies are incorporated in India, and on the company incorporated in India, you need to comply the Companies Act. Perfect. Aniket, 1 lakh to 3 lakh. Okay. And officer in default, penalty is 25,000 to 5 lakh rupees, right? So accordingly, you need to mention that penalty. Okay. Question number 2. Daisy, I think so. Geeta, your doubt is clear. 3 lakh to 5 lakhs penalty. Geeta, 3 lakhs to 5 lakh penalty. On whom? Okay, so move towards the second question. Okay. So second question, Daisy is a company limited incorporated Singapore, okay, like a Flipkart, desires to establish a branch office at Mumbai. Karlo bhai. You being a practicing CA have been appointed by the company as a license officer for compliance of legal formalities on behalf of the company. Examine the provision of Companies Act 2013. Answer the following. First, whether branch office will be considered as a company incorporated outside India. Whether branch office will be considered as a company incorporated outside India. Yes or no? If yes, state the document you are required to furnish on behalf of the company on the establishment of branch office, section 380. Okay, so first question is whether branch office will be considered a place of business. we have to mention, Karthi, we have to mention section and exam or provision contained in Companies Act is enough. Basically, section mentioning of section is not much necessary, or we can say important in C enter part. But for final part, you need to remember important sections only, right? And as far as this foreign company is concerned, you need to remember the section 379, section 380, and section 392 penalty part. These three sections are important. Okay. Okay, Rita. Perfect. Okay, so second question, first part is yes. Branch office will be considered as a place of business in India. Okay. And what document you need to provide? Section 380 documents. Okay. Question number third. So question number third, is there any doubt in question 1 and 2? Question number third, Galileo Limited. Okay, Galileo is a foreign name, right? Galileo is a foreign company in Germany. It established a place of business in Mumbai. Explain the relevant provision of the Companies Act 2013, rules made thereunder relating to preparation, filing of financial statement, as also the documents to be attached along with the financial statement by the foreign company. Okay, so this deals with the accounts, and accounts for there is a section 381 you need to remember, right? If you can remember. So section 381, we need to mention that balance sheet you need to prepare. Only desire, it cannot constitute as a Shailendra brother, that branch office will be considered as a principal place of business, right? Okay. For question number third, section 381, you need to copy paste from the module only, content part, critical kind of question. Question number 4. In the light of provision of Companies Act, is there any doubt? In the light of provision of Companies Act, examine whether the following companies can be considered as a foreign company. Right? Following companies can be considered as a foreign company. First is Redstone Limited is a company registered in Singapore. Okay. The board of directors meets and execute business decision at their board meeting. Okay. First condition is fulfilled, like company is incorporated outside India. Now the second condition. Second condition is place of business, right? For place of business, perfect Aniket form number. Okay, for place of business, what exactly board is doing? Board is doing board meeting in India only, right? And execute their decisions only. So that will be treated as a business decisions. So companies incorporated outside India to Singapore, right? The board BOD meets and execute business decision at their board meeting held in India. So whether that will be treated as a foreign company. Question 4 first. Yes or no? Which document submitted for branch office? Same Gita as mentioned under section 380. Same documents, memorandum, each and everything is there. Next question 4.1. What is the answer? Redstone will be treated as a foreign company, yes or no? Four one. No, board meeting cannot be. Perfect. Aniket, perfect, Shalin, right? So board meeting, the board executing only the board decisions. There is no place of business, so that will be not treated as a foreign company. Second question. Zen Limited Liability Company registered in Dubai has installed its main server in Dubai. Okay, if we can recall, electronic mode server India में होना चाहिए, जरूरी नहीं है, right? For maintaining office automation software by cloud computing for clients in India. So whether this is a foreign company or a not a foreign company, right? Fourth B. What is the correct answer? It is not necessary to locate your server in India only. in the rules definition provided for electronic mode. So what is the correct answer? Fourth, second. Come on, come on, come on. Foreign company, foreign company. No, for this, yes. For this, not foreign company. For this, yes, this is the foreign company because that will cover this your electronic mode only. Perfect. Perfect, Shalan. Perfect, Karthik. Perfect, Aniket bhai. Question number 5. Abroad Limited, a foreign company without establishing a place of business in India, proposes to issue prospectus for subscription of securities in India. Being a consultant of the company, advice on the procedure of such a issue of prospectus by Abroad Limited. Okay, for the prospectus, section 389 is there. So we need to comply all the conditions of 389. We need to comply the section 26 also. We need to comply section 34, 35, 36 also. So these all needs to be disclosed. Expert consent, expert has not withdrawn his consent. So these are the points we need to mention, right? So is there any issue? Any issue in question number 5? Is there any problem in the question from 1 to 5, from section 379 to section 392? If you have any problem, let me know. If you have any problem, let me know. It should be signed, dated, expert consent. Perfect, Aniket. And free from misstatement also. So is there any problem? Is there any problem in section part, in question part? Okay, so these are the 2 questions. Okay. Hum Limited, a foreign company, contravened. Bhomik, difference between deemed Indian company and foreign company is very simple. For deemed Indian, for foreign company, you need to fulfill the definition of foreign company as mentioned under section 2 clause 42. Means your company should be incorporated outside India plus place of business in India and you are doing any business in India, right? So this is the definition of foreign company. Now what is deemed Indian company? Deemed Indian company means a company which is incorporated outside India, but more than 50% of its shares are holding by Indian citizens or a company incorporated in India, then such company will be treated as a deemed Indian company. It means that all the sections of companies that will apply over such deemed Indian company. However, on the foreign company only section number 379 to section 393 will apply. Bhomik bhai, now it is clear what is the difference between both of the companies. This foreign company chapter is 20 chapter, right? Okay, question 10. Hum Limited, MCQ part. Hum Limited, a foreign company, contravened provision of this chapter. Company incorporated. What is the consequences? What is the consequences? What is the consequences? On the company part, what is the consequences? Okay, good. Right, for the penalty part, there is a section called 392 is there. So company has contravened, so whatever penalty is applicable to the company, that is 1 lakh to 3 lakh is the penalty amount, and if the company continues for this default, then 50,000 is the separate amount. I think so. Now this is clear. So this is your correct. Karthik, if in question 4.1, if it is not a foreign company, then what we have to mention? We need to mention that this is not a foreign company. It is not mentioned the company is not a foreign company, will be treated as an Indian company. No, that will be a foreign company as per their definition. So we will simply mention this is not a foreign company as per definition 2 clause 42. Karthik, we will mention this only. Okay, next question. Any process, notice, other document required to be served on a foreign company shall be deemed to be sufficiently served by, if it is addressed to any person whose name, address have been delivered to the ROC, if delivered by electronic mode, left at or sent by post to the address which has been so delivered to the ROC, all of the above. Correct option is option 1, 2, 3, 4. Option 1, 2, 3, 4. Option 1, 2, 3, 4. Which one is correct? Any of our? Okay, perfect. All right. So this is the correct one. Okay. So with this, we completed the MCQ part. We completed the practical question descriptive part. We completed the section part. We complete from charts. We completed from module also. Each and everything we completed. So is there any doubt from section 379 to section 393? You can ask it out. Is there any question doubt? You can ask it out. If any MCQ doubt, you can go with this. Okay. And I think so chart helps you in this study, right? These are the charts. I think so. Each and everything is clear. If you have any doubt, no doubts, sir. Aniket bhai, charts are very helpful. Thank you, Aniket bhai. Okay. What about others? Is there any doubt? Is there any doubts? Is there any doubt? What about others? Is there any doubt? What about others? Okay. I think so. There is no doubt. If you have any doubt, you can just leave your doubt here only. I will answer your doubts. Okay. Thanks a lot. Thank you.